Hello, I'm Michibit, your crypto kitty friend. I'm purring with happiness to see you here in Silverbit, where we all learn how to invest. Today I have prepared for you a great video about technical analysis. This will be a very friendly and easy to understand guide on how to read price charts and analyze market trends so you can make better investment decisions. Oh, and before I forget, I want to ask you a kitty favor. If you find this video helpful, please hit the like button and consider subscribing so you can help us keep growing the channel. Okay, time to start. I guess you've already wondered what those bunch of complicated lines you've seen on the screens of some people buying assets, like stocks or cryptocurrencies are. Screens with green, red colors, lines, bars, and many numbers. Don't worry, they're not as complicated as they seem. These are advanced price charts, which are used for technical analysis. Technical analysis is a way of analyzing the price and trend of an asset, such as Bitcoin or the Google stock, by studying the behavior of its price over time, using different indicators, and thus trying to predict how its price will behave in the future. But, have you heard of fundamental analysis too? The fundamental analysis is the study of the theoretical value of an asset through the understanding of the different internal and external variables that can influence its true potential and price growth. So what type of analysis should I then use? The truth is that every investor should lean on both. First, before investing, one must understand the true potential of an asset or technology, what can make its price rise and fall over time, and then technically analyze its price and trend, in order to determine the best moment to buy and sell, and not so much trying to predict an exact price, as nobody is a magician to do so. So, let's get acquainted with technical analysis. First, where can I see price charts? There are several charting services you can use, such as tradingview.com, finviz.com, and stockcharts.com. We recommend using tradingview.com, a web app that offers many benefits with its free account, without even downloading anything to your computer. Second, how do I read the prices? Charts can be configured primarily as line charts, bar charts, and candlestick charts. The first, a line chart, is perhaps the most basic, which helps you to quickly read a price and spot a trend, although it is the least used, as it leaves a lot of key information out. You can easily find these charts on the finance page of Google or Yahoo. Let's move on to the bar chart. This is without a doubt my favorite, as I feel that it allows me a quick and easy reading of the daily and weekly price of an asset. If you look at the bar, it gives you the day's open price on the left, the day's close price on the right, and its length tells you how far the price moved throughout the day, with its high and low at either end of the bar. By putting all the bars together, it is easy to understand how prices have behaved compared to the previous day, and thus determine a trend. Now, the candlestick chart allows you to compare prices by color and length. If you see, each price has the shape of a candle, and if its color is green, the price went up compared to the previous day, and if its price is red, the price went down. The open price is at the lower end of the wide part of the candle, and the thin part tells you the maximum or minimum price reached during the day. Many people prefer this type of chart, but my recommendation is that if this is your first time doing technical analysis, then start by using bar charts, as they will avoid possible confusions. Here I show you what a bar chart looks like for Google's share price, day per day, for the last 10 months or so. On the right side of the chart, you will always have the prices of the asset. For example, at the time of this capture, Google was trading at $92.80. At the bottom, you will always see the measure of time. In this case, we are measuring the daily movement, and you can see the months of the year indicated one per one. At first glance, we can read that since April 2022, the price of this share has had a downward trend for the last 9 months, with some bullish weeks. What is the next most important thing to read on a price chart? Something very important in technical analysis is the volume of transactions per time frame. Usually this can be added at the bottom of each chart, and if using the TradingView app, you can click on the top indicators option to search for it and add it. We recommend you search and add only the one called volume. You will see the volume bars appear at the bottom of your chart. Each bar represents the total volume of transactions for a full day. In the United States stock market, one trading day represents 6.5 hours. In the case of cryptocurrencies, the market does not close, therefore the trading journey represents 24 hours a day. The green color represents the volume on a bullish day, and the red color on a day when the price fell. Now that you have your price bars and daily volume, how can you read the trend? One of the most common and useful indicators for this are exponential moving averages, known as EMA. Let me show you. These are price lines that are used to show the average price for a given number of days in the past, and the word exponential tells you that by calculating this average and drawing the line on the chart, You are giving more weight to the most recent days, as they are closer to the present reality. You can add this moving average in TradingView, also from the Indicators button. We recommend changing the average to 30 or 50 days. This is a good way to measure the most recent trend, if your goal is to invest in an asset for a few months or a year at the most. If you realize, the average is a line that follows the price of the asset, showing a trend for the same. Usually, what the exponential moving average tells us is that if the majority of the bars are above the line, the price of the Google stock, in this example, is moving above its normal average price, so to speak, of the last 30 days. Conversely, if most of the bars are below the line, it indicates a downtrend, as prices are moving below their normal average price. It is very important to emphasize that this indicator shows the price trend with respect to its normality, and therefore indicates a possible behavior maintained for the next 30 days on average, depending on the days you set, so as long as other internal and external factors are maintained. Never use this indicator as a single signal to buy or sell, and never, please ever think that when a bar crosses above the line, the trend will immediately change and prices will start going up or down. Assuming this can cost you your investment, this should only be a support to your strategy. This chart from Google Stock shows you that if someone had wrongly assumed that, at the beginning of June 2022, they would have started losing a lot of money in mid-August. If your goal is to invest in an asset for more than 1 year, we also recommend adding a 200-day exponential moving average. This average is a very good way to confirm a sustained long-term trend. I recommend never adding more than 2 averages at a time. You will end up confused and indecisive. What are support levels and resistance levels? In the world of technical analysis, you are going to hear a lot about support and resistance levels. These are imaginary lines, which you can draw on the chart yourself, that allow you to see a level where the asset price is usually finding support in an uptrend, or resistance in a downtrend. The common line of thinking is that if the price breaks a resistance line, for the first time in many weeks or months, it will then reverse trend and start rising, and if the price breaks a support line for the first time, it will then start falling. Be very careful blindly assuming this, as it would be the same error as with exponential averages. Yes, it is very possible that by breaking a price line that could not be broken in several months, the price might begin a new trend, but you must support this hypothesis with other internal fundamental factors of the company itself, and other external ones of the sector in which it operates and the economy itself. Again, be very careful not to overuse these lines, as they are imaginary, they came from your mind, and they can suggest things that have no direct relationship with the forces that really move the market. Do chart patterns really work? The truth, not much. They are part of the world of technical analysis, but again, they are mental suggestions of past behavior, and just as they can be an indicator of a possible trend, they do not take into account any macroeconomic factor. You will find thousands of videos, courses and even TikToks, telling you about graphic patterns that will make you millions in profits, but the truth is that in most cases they will not have any real use for your investments. Are there other indicators that can help me earn a lot of money? I'm a responsible kitty, and I'll never try to give you information that I can't back up. The overuse of indicators is one of the biggest mistakes of those who start to invest. There are at least more than 100 technical indicators, and the truth is that most do not provide any value. We've shown you some of the most important ones in this video, but there are still a few more that you can learn to use when you're a more experienced investor, and that might add value to your charts, but everything at its time. If you are just starting out, try to stick to the ones we show in this video, and always use a combination of fundamental analysis to choose your investments, and technical analysis to determine the overall market trend, and thus decide the best time to buy or sell. Remember that your analysis is only half of the formula for investing. Over time, you will learn to read other factors that influence the price of assets, such as the cycles of buying or accumulation, and selling or distribution in the hands of large investment funds, who are the ones that truly move the prices in financial markets. What is the next step, now that I know how to use technical analysis to read price trends? Once you create your account with TradingView, for example, and configure your first chart, we recommend you decide if you want to invest in the United States stock market, cryptocurrencies, or both. I will have other videos coming soon, in which I will go over these types of investments. Stay tuned. If you have more questions, please reach us via social media, or visit our website, Michibit.com. Find the link below the video, in the comments section. Thank you for watching my video. Remember, I'm Michibit, and if this video was helpful to you, please hit the like button, and if you subscribe too, I will get a bonus cookie. Meow. See you later, alligator.